Welcome back, investors. This time we are going to see an interesting topic, because market is people are talking about all-time high, but we need not worry about all-time high, because the Sensex has gone to all-time high doesn't mean that all stocks have hit the roof, because there are a lot of stocks which has not hit the roof. So now we'll take a look at it. At this level, I am slightly concerned. I don't want to invest. I wanted some safety mechanism or some defensive bet. So in such a situation, what type of sector or stocks I need to invest? That's a could be an answer. People are looking, or it could be the idea of running behind their mind. I feel that this point in time, the pharma sector could be a slightly better bet. Because why it is so? Because if you look at it, the 1 year performance of the pharma funds have really improved. But though the 1 year returns are showing somewhere between 20 to 27% of the 5 funds which have been taken for this research. That's about ICICI Pharma, Nippon, SBI, Mirai and DSP. These are the 5 funds we have taken for the research. For the fund, the 5 funds which I have referred now, the 1 year performance appears to be great. But when you look at it, because the 1 year performance is improved because of the 3 months performance. 3 months these funds have delivered anywhere between 19 to close to 20%, between 16 to 20% it has given delivered. Because it delivered between 16 to 20%, the 1 year returns have really substantially jumped. So though the 1 year performance is 20% return, if you look at it closely, these funds return of 2 years is really pathetic, because you know that in 2020, after the COVID issue has been, a lot of pharmas are really doing good, because people are little worried, and then they are trying to buy some medicines to support them, because a lot of people have taken a precautionary and careful in their health condition. There are a lot of ailments could have been drastically dropped. That's why it reflected even in the pharma sales itself. Pharma sales itself have dropped after the COVID. So that clears probably that could be some immunity could have been developed with the investor. That's why the pharma sales have dropped substantially. In such a situations, what I have to do that? So it's only bet we can try to take pharma, because the 2 years performance of pharma is not great. But look at it, there are select set of stocks that have really given 40-50%. I'm just giving a few names. Out of that, if you look at it, Apollo Hospital has given 37% in the last 1 year's time. And there is a funds called Krishna Institute of Medical Science that's given a 55%, and Torrent Pharmaceuticals has given 35%, Arvindo Pharma has given 40%, and JP Chemicals is 51%. JP Chemicals, one particular stock, I just know that, because I personally see that stock right from 2017, because I bought some quantity at 2017. It was doing a lot of underperformance, but last 2-3 years time, it's given a fabulous returns. Somewhere I bought around 300 plus, now it is around 2,200 to 3,300. Such a good rally. Despite rally of last couple of years time, this stall still continues to be going good. I'm not sure about those really serious tracking. JP Chemicals could be able to answer that. And the Lupin has given a 45% return, and Synergy also, Synergy International also given the 37% return. During the same period, if you look at it, some of stocks like Zydus Life Science have given 63%, and the Narayana Hrudaya Medical Hospital has given close to around 58%. Vijay Diagnostics have given 38%. What is the notable missing this point in time? If you look at it, Divi's Lab, it has not given a great return. It has given a very 2% return only it has given. So in such a situation, if you want a stock pick, you can go and look which are the stocks of the seriously underperform, that you can buy it. If you are not sure about bottom picking, all that, I suggest you to look for the pharma funds. But whenever you are entering into pharma fund or any sector, you need to keep in mind that, because sector funds are highly volatile, and it is going to time bound. It works for wonderful for some years, and then it underperforms drastically. So you have an idea to get into sector fund, please fix yourself an idea, maybe 25% return, 30% return, whatever the numbers you think, how much you risk you can be able to take, that amount you just fix going by this history. Then that should be a benchmark. The moment the fund is in it, gives you 25%, 30%, maybe in 6 months, 1 year, 1.5 years, you should have the capacity to exit the fund, because it's always makes sense to exit the sector funds after the stream has been left. So when you are looking for some sector funds to be invested, I suggest you can take exposure to the pharma funds. Normally, whenever you are going to sector funds, we as a financial planners, we always think it is better to restrict 5 to 10% of your overall portfolio to the sector funds. So if you are first time investor coming, I think you should restrict to sector fund between 5 to 10% of your portfolio size. That's a max you can try to do that. If you try to do that, probably over the 1-2 years time, there's a potential, because another sector which is underperforming is IT. In IT space, large caps are really struggling. The mid size are trying to really outperform the large peers. So in pharma, there are certain stocks really underperformed, though it has given 40-50%, not all stocks participate in the big level. So I think there is a great possibility in pharma sector to make money. So this is Suresh Parthasarathy, certified financial planner, founder, myassetconsultant.com. You are a first time to my channel, please subscribe. We have put close to around 145-146 channels. We are adding quite a good subscriber base over the period of time. And if you like this video, give a thumbs up to us. And you want to share to some of your friends, please do share this video. If you have anything to be, any topic you want like to get covered, please put it in the comment box. As per the priority, we'll take it. This is Suresh Parthasarathy signing off. Bye.